Have you ever wondered why some people keep investing but still do not see real financial progress? The main reason is not a lack of money, but the wrong order of handling money. Wealth building is not only about investing, it is about doing things in the correct sequence. If the foundation is weak, even good investments may not deliver strong results because unexpected financial problems can disrupt long-term plans. The first step is creating an emergency fund. This is money saved for unexpected situations such as medical expenses, job loss, urgent repairs, or family emergencies. Without this safety net, people often depend on credit cards or sell investments at the wrong time. Start small by saving at least 1 month of expenses, then gradually build it to 3 to 6 months of living costs. An emergency fund provides financial stability and peace of mind while protecting your long-term investments. The next step is clearing high-interest debt. Credit card balances and expensive loans can grow very quickly and reduce your ability to build wealth. In many cases, the interest paid on debt is higher than the returns earned from investing. Paying off these debts is like earning a guaranteed return on your money. Focus on the highest interest debt first while making minimum payments on the others. This strategy can improve your financial health faster and free up more cash for future goals. After that, always take advantage of employer retirement benefits if they are available. If your company offers a matching contribution, make sure you receive the full match. This is essentially free money that increases your investment balance and helps your wealth grow faster. Missing out on an employer match means missing one of the easiest opportunities to build long-term savings. Then focus on tax-saving and retirement accounts. These accounts help your money grow more efficiently through tax advantages and long-term compounding. Over time, the tax savings can significantly increase your overall returns. If available, health savings accounts can also provide additional benefits by helping you prepare for future medical expenses while enjoying tax advantages. Once these foundations are in place, continue building your retirement investments and increasing your regular contributions. Consistency is important because long-term wealth is often the result of disciplined saving and investing over many years rather than short-term market gains. Finally, invest in flexible investment accounts such as stocks or mutual funds outside retirement plans. These investments can help you achieve goals beyond retirement and create additional wealth over time. However, they generally involve more risk and fewer tax benefits, which is why they should come after the earlier steps have been completed. In simple words, the correct order is emergency fund first, debt clearance next, employer benefits, tax-saving accounts, retirement investing, and then flexible investments. Following this system helps you build wealth in a safe, structured, and sustainable way. By focusing on the right priorities at the right time, you give yourself a much stronger chance of achieving long-term financial success.